Sir, can we start?
Yes, we can start.
Good evening to everyone. A warm welcome to all. We are present here today for the earning call for the financial year 22-23. I am Shriji Polshikar. I am a quality and systems head at SKP Bearing Industries, and today I will be hosting this earning call. We will start off with our introduction, some financial highlights, additional highlights, investment merits, market overview, MD's message, after which the forum will be open for question and answers. For those who are new to us, I will introduce a few things about us. SKP Bearing Industries was established in the year 1991 as a partnership firm under the name of SKP Bearing Industries. Company is a manufacturer of needle rollers, cylindrical rollers, pins and steel balls, which are all called as rolling elements. We are supplying these rolling elements across India to all reputed bearing manufacturers and OEM in the domestic market. Industries such as textile, automobile, agriculture are all involved in this market. And we are known as one of the players in the list of finished roller manufacturers. Company also exports its products to customers in Asia and Latin America. SKP Bearing Industries is a IATF certified organization. In 2012 and 13, company has entered into wind power generation business with commission capacity of 0.8 megawatt. I'm sorry. SKP Bearing Industries was thereafter converted into a private limited company, SKP Bearing Industries Private Limited, on 6 January 2022, which was later converted into a public limited company under the name of SKP Bearing Industries Limited. A special resolution was passed and we got a certificate of incorporation in February 2022. I will now hand over to our CFO Shripada Patil for the financial highlights.
Good evening, everyone. Our total revenue for the year 2022-23 is 49.35 crores as compared to last year, which was 10.27 for the period 6 January to 31st March. Our EBITDA is 1988 lakhs, that is 19 crore 88 lakhs, which was compared to last year, it was 5.24. Similarly, our profit before tax and profit after tax, last year it was 17.97. Now it is 13.25. Similarly, our PAT is also changed, but as you can see the comparison. Our balance sheet, which is already published on public platform, the same has been shared. Our profit and loss statement. Our accounting ratios. Our gross profit margin and PAT, as you can see, are 36 and 27% respectively for this year. Our EBITDA and earning before interest and tax percent are 40 and 38. Our employee costs consist of 7.43% of the revenue. Depreciation is 2.1% of the revenue. Our cash conversion cycle has improved to 172 days. Our current ratio is 3.18 and our quick ratio is 2.43. I would now hand over to Shriji for additional highlights.
Thank you, Shripada. I will now give you further highlights for the previous year. In case of roller division, our percentage increase in growth is 12% as compared to the previous year. 77% of overall revenue is contributed by the roller division. The current annual capacity is around 110 tons monthly. That comes up to 1,320 tons per annum. The overall utilization of this division is 92%. Investments and key projects like installation of AI-based system, additional of high-speed machines had been planned for the financial year 22-23 to increase the capacity utilizations. In case of ball division, the percentage increase in ball is 50% as compared to the previous year. Ball division contributes 9.5% of overall revenue for the year 22-23. The current annual capacity of this plant is 480 tons, that is monthly 40 tons. The utilization of this division is 45%. Investments and key projects like new machinery, revamping and modification of machines had been planned for the financial year 22-23 to utilize the capacity. Some machines have already been procured and the installation would take place in the new plant, which is expected to be functional in Q3 of this year. In case of other divisions, the percentage growth is almost negligible, but this other division contributes to 6.9% of overall revenue. These are stable projects, and export comprises of 3% of overall revenue, and in which there has been a marginal growth. Some of the milestones for our financial year 22-23 are first AI-based machine was installed and it is in production. High-speed machines have been installed to debottleneck the capacities. Ground floor of admin building is taken into production. SKP quarters for employees who are coming from other states is nearing completion. Company has achieved a Maruti Green status, which opens opportunity with new customers linked with Maruti and Hyundai. Some of the future plans and projections for 23-25 years, for the financial year 23-25, a continuous furnace to increase the capacity of roller divisions to 200 tons monthly. That is 2,400 tons annually. Further procurement of AI-based system for machine capacity utilizations. Setup of ball orientation production plant at new location, for which the machines have already been procured and installation would take place in the new plant, which will be again, like I said in the previous slide, functional in around Q3 of this financial year. Continuous furnace will also be procured for ball unit, which will shoot the capacity to 200 tons per month, that is 2,400 tons annually. This utilization of the capacity would increase gradually. In case of other division, rooftop solar is installed in the current factory premises, increasing the generation to around 0.3 kilowatt. And company aims to focus on exports for value addition. I would like to give SKP's key strengths. First is we manufacture our products with advanced technology, and most of these technologies are developed in-house. We have a global presence and a customer base where we are not dependent on one single industry, and we have various industries covered. We have a well-oiled team with over 30 years of experience. We have a self-generation of electricity by rooftop solar and wind. One of the players in manufacture, we have multiple rolling elements under one single roof and almost a debt-free company. For market overview, India is now going for morely where we have a lot of opportunities. The bearing market in India is rising, and monthly there are many factors which are contributing to this demand. Government initiatives like Make in India and has motivated foreign investments, which in turn open opportunities for our domestic as well as overseas market. I would further like to now request our MD, Mr. Srinand Parshikar, to please share his message with us. Sir?
Sir, you are on mute.
Sorry. Good evening, everyone. There are many participants and so many which are new to the SKP family. We welcome everyone. Now would like to give certain highlights of our company and our future plans. SKP Bearing Industries, we have been planning many futuristic projects. As you are aware, those who have already come in touch with us are aware, the capacities or what we are operating at are utilized to the maximum levels. The reasons for limitation of capacities is human resources and certain machineries which are bottlenecking our operations. Thirdly, we are a very new company to a corporate world. We have changed from a partnership company to a limited company only last year in January. As such, we are only 13 to 14-year-old company. We have our corporate culture in place, and what plans we have for the futures and the capacities what we are adding is multiple times. What you must have seen is a past data. In past data, you must have seen what we are operating is around close to 100-ton capacities. Now, what we are talking of a multiplier of 4x in next 2 years period of time. We are already working on those lines. We already have so many customer focus, so many zone focus, export. The limitations what are there in current scenario, we are trying to overcome and create free capacity available to all customers sort of a situations in coming 1 to 2 years period of time. The products what we are manufacturing are pure engineering product. They are highly performance requirement type of products. One cannot risk these type of products being shifted from one supplier to another. So the performance and approving is essence of our product line. We are very established player in current world. People know us by the name. Also, we are the only player in India who is offering currently all the 4 key rolling elements under a single roof. Now, people would ask that what is the advantage of having a multiple rolling elements being offered in a single roof? The reason is there are many applications in automotive sectors where you require ball as well as rollers. Now, all these major OEMs got a limitations of vendor registrations, and supply chain management is a big issue. To create a vendor and to sustain it, to maintain it is a challenge to OEMs. If you are, you must be aware in past 8 to 10 years time, all auto OEMs have tried to reduce their vendor base from X level to Y level. When we are offering a single roof solutions to all these players, it's very easy for them to grasp to. So in that line of business, we have got very attractive propositions getting worked out. We are in discussing with many clients in India and abroad for capacities are being offered. We have faced many challenges in the past. As you must be aware that India has not supported other bloc countries, the foreign bloc countries, And those who are aware, in Europe, they have withdrawn a capacity, they call it a duty exemption of 8%, and they will impose additional 1% plus 1%, around 10% duties to Indian products, because of which our products have become 10% costlier to European countries. We have been approved in many customers, orders have been received, and because of these socio, or you call it a geopolitical situation, we could not able to capitalize on those export orders, and the growth what we are forecasting, we couldn't able to achieve. But leave aside that particular situation, we are very positive on the export potentials, and we are hopeful that we will be in a position to capture a very good export market in coming 2 years period of time. Also, for the balls, we have received approvals, and we are in discussing with many big consumers. And once we have the finalizations, once the techno-commercial of things are settled, we are hopeful that our capacities, utilizations would be at very good level in near future time. We are creating capacities because we know that in past, if the capacities are short and we had a customer order, we had to lose because we are in a position to supply in time. Human resource is a big challenge, and we want to overcome it by AI-based systems, and also we are providing facilities to all employees so that we have a good retention, and utilizations of overall utilization of machines can be increased. We are very hopeful for future, and we are hopeful that we will be in a position to expand to new levels of revenue growth in next 2 to 3 years period of time. Thank you very much for our entire investor community who has joined today, and this forum is now open. Anybody can ask a question, or anybody has got, they can unmute it, just introduce themselves, and then they can take a question hour.
Hi, can I go ahead?
Yes, please.
Yes, this is Kunal Patel from Ahmedabad. So my first question is, when you decided on to do such a big capex, did you had any soft signal from your customers, and hence you decided to put up the 4x capacity?
From the current customer levels?
Or current or new, either. Did you had any soft commitments from your customers?
See, the commitments for the roller business was already there, and capacity requirement was available. We are living with very small capacities, and we were utilizing it to the maximum level. Now, it's not possible for anyone in engineering industry to get a commitment. Soft commitment also, it's a problem. What importance is the performance, and then approving themselves. So far as our performance and proving, because we are already IITF company, we are already a Maruti Green vendor. So all qualifications and necessary system availability is there. Now it's only question of a techno commercial discussion at the final stages.
Okay, so second question is regarding our product. So how much time does it take for our product to get approved from the OEMs?
It depends on the criticality of the product.
But usually, is it 18 months, 20 months, or lower, lesser?
Again, I'll just say, see, there are multiple products. One, there are some similar type of products, wherein you have already supplying some particular item, wherein all the parameters, everything is same. Now, if there is another applications would be having a similar applications, then it becomes approval is faster. Then it's question of validation. So that the customer would do themselves.
Understood, understood. Sir, how much total CapEx we are doing? Sorry, I'm new to the company, so don't know much.
In the current year,
Current year and next year.
total capital capex planned in the current year is already, we have done around 11 to 12 CR, we have already done it. Another capex to the tune of similar nature is already planned for next 2 to 3 years period of time.
Okay, so in all around 25
It's
crores.
depending on the product flow, what are the need based requirement, where we feel that this particular technology is to be incorporated. So there are many technological advantages are coming in our fields. So wherever need be, the investment is planned accordingly.
So in all roughly around 25 odd crores of CapEx.
Yeah.
Sir,
Sir, your capex question in this year, we have published in the balance sheet as 7.52 crores capital
Right.
capex.
right. So when we decided to do this CapEx, did we have any IRR in mind or payback period in mind when we did this CapEx?
See, our company is a zero debt company.
Yeah. No, but did you had any payback period in mind?
In
Like
our
17, 18 ROCs or?
No. In our case, it's little different. See, you cannot have like a process industry where you do a capex and then you do your utilization and then your ROR worked out. In our case, it's little different. You do a capacity planning, you create capacities, you have something which is to be available to the customer. And then you approach the customers that these are the things you can offer them. You know, the capacities, the quality, the quantity, the value chain management, whatever, all, you know, all package. And when the customer comes, they audit they come, they see your things, the customers which are already catering to you, they are already getting material from you. For them it's easy, but for new customers I am talking. So that's the way it is.
Let me ask this question in a different way. When our capacities are on stream and the capacity utilization is optimum, what kind of revenues can you generate?
See, as on date, our capacities to a current level, what we call it, you must have seen our presentation in that, is already to a 90% level plus. Okay, now it's very in engineering industries, any capacity utilizations to this particular levels are considered to be very good. Why? Because you have so many machineries involved and so many related thing. Mr. Doshi, can you just close your video? Okay. Now, see, sorry for interruption. The capacities which are available, utilizations we expect in another 2 to 3 years period of time. Once we do around, say, 80 to 85% or maybe 90% of capacities getting utilized, the revenue model currently where we are, operating the level what we are operating. Today we are around 50. We should touch once we in anywhere between 150 to 200.
Okay, and margins would be around 40, 45, 50%. What would be the range?
No. See, first thing, there are so many misconceptions about our company. Our company was a partnership company till so far. Okay, partnership company. What happened? There is, for a partners, there is no salary. So is the remuneration which comes only after all the appropriation. So it becomes what happens, the what do we call it, gross profit margins is very high in a partnership concern. But in a public limited company or a corporate company, the salaries and all things comes above. So our gross profit margins and is our this year 22-23 is our true year of performance. There are so many appropriations, so many due diligence, so many, related thing, like one is already published in notes of account that so far when we were there in a partnership company, we were all our inventory valuation were done on GST inclusive basis. Whereas as per so many expert views, we have been told that it is on exclusive basis, not inclusive basis. So we had to exclude the GST amounts, which had a large impact on our bottom line, and which is already published in notes of accounts in current year. So the true performance and the true level is yet to come. That's what I can say. But these will be the more or less the level of operations for futures.
Understood. Sir, one statement which you gave was you will focus a lot more on exports.
Yes.
So, so what initiatives we are taking on the export side? Secondly, because our capacity would be 4x, so have we made our investments on the people side, HR side? So how is the organization structure looking now? Because 50 crores and 200 crores is entirely different ballgame.
Yes, I understand your point, and yes, a very fair point. And you must have seen in presentation also, it is already shown that we are very, very strong in our HR side. We have so many initiatives we are planning on HR sides. That is number one. Number two, we are also incorporating technologies, which is advanced technologies, which is AI-based technologies, where very negligible human resources are required. I hope your one question is answered. Number one. Number two, for exports, we are already in discussion with many of our clients. So many of our clients are already supplying. We are supplying to them in India, India plants. What we are discussing with them to supply to their plants in overseas, in USA, in Europe, or in other countries. So these are the areas where opportunities are available. Those are already consuming. Some people takes time in approval or maybe discussion internally. Some people are fast and they maybe in positions to maybe capitalize those things fast.
Okay, I'll come back in queue. I have more questions, but I'll come back in queue now. Thank you.
Yeah.
Yes, sir. Yeah, Jignesh here.
Yes.
Sir, first want to understand in FY22, the entire year, how much was the revenues from renewable energy and how much is the revenues in this year out of total 48 crores?
I think Shripada can answer.
Yes, just a minute.
For which year did you say?
20 to 23, you mean, right?
Yes, renewable energy, how
Yeah.
much revenues? Yeah.
I think it's around, I already given in presentation, around 6 point something percentage.
Okay, okay, that is the from renewable energy.
Yes.
Yes, that's from renewable energy. The amount come up to around 84 lakhs for 85 days
Okay.
for the period in which we are having 6.85%.
Last year.
Yes, the
20 to
percentage
23.
remains same, the amount would vary.
Okay. And in this year's presentation, sorry, results, it's mentioned that we'll invest into 2 megawatt solar plant. So that is 12 crores investments. So that is over and above the capex that we plan for our bearings.
Yeah. There are two types of capex. What is we call is a capacity additions.
Okay.
See, please understand our model. Our SKP is a total debt-free company.
Yes.
And we are a cash surplus, and years to year we are generating huge cash surpluses. Okay. Now,
Okay.
either you park these funds in either instruments which are very low yield earning, or
Okay.
you do a very systematized planned investments for next many years, so that your revenue generation, what is cash generation, which is there being utilized, that is number one, and you get a much more IRR on these particular funds which is deployed. So overall, the company gets advantage and very long term period of time.
So apart from this 2 megawatt, do we plan because of our capex in bearings? Still, we will have some room left for expansion going forward every year in renewable energy.
Renewable energy is not our focus. Our focus is our business. Only hello. Our focus is our business. We do not want to divert our focus from our business. This is the only opportunity for cash surplus to be utilized. That is why we have done a small investment.
Okay. And since now we have received this Maruti Green certification, how it will help us to maybe fasten the revenue base, or how, what is the implication of this?
Yeah, I'll explain. See, in a car segment, Maruti is the largest car manufacturer.
Yes.
There are various platforms. I'll give a few examples. Like you have a CV joint applications, then you have a transmission applications, steering applications, engine applications. So these various applications where we are not currently present, steering sitting systems. So these are the applications we are currently not present. We are not in a position to supply because we are not a Maruti Green supplier. We were so far a yellow supplier. Yellow supplier cannot get a new business, can be a sustainable supplier. So now all the customers, there are so many customers in this. A majority of them were importing. Majority of them are importing currently their requirements from out of India. Maybe from Europe, maybe from China or other continent. Now, all those customers which are importing, we have given them an option, an equivalent option, a cost saving option, and a inventory saving options to shift from those options to SKP. Now, for them, since we are already Maruti Green, one door is very clearly open, that as to we can directly shift to SKP. Now, the question of validations, testing, approvals, this is the thing, and which is going on.
Okay. So it is
And
specifically
sorry,
only for
one more thing. This is both ball and roller. And one question was asked regarding the soft commitment. The value of this business is close to maybe 60 CR each customer, and there are multiple customers.
okay. So this application Maruti Green is specifically for ICE segment, or
No.
we can also supply to EVs?
It is nothing to do with ICE, non-ICE. It's nothing to do with this. It is supplied to it is related to the systems. It is about the management, and it is about
Okay.
Methodology and how do you manufacture products, commitments and supplies. And so it is nothing to do with EV or non-EV.
And sir, as per your last conference call in November, I believe, we had mentioned that our new plant may be ready by April or May. So any particular challenges in starting this new plant that it has been delayed by 9 months?
It's not 9 months actually.
Okay.
We were expecting to supply, get it ready by this particular quarter. It was May. We were planning. It's already at advanced stage, but it's a construction activity, it's a labor-oriented activity. Those who are aware about the construction activity, and there were so many, legal requirements, the compliances requirement with local bodies, so which is to be done. So that takes. See, you can predict that this particular activity can be finished in 1 month time, but if it is taken 2 months time or 3 months time, till that time you cannot, start activities. So because of that, otherwise everything is going on stream.
In November, when we had discussed, that time we had commitment of procurement of land by
Okay.
April, not April, before April. And then
Okay.
we have start of construction. And the
Okay.
other plant which was supposed to be functional is the ground floor of admin block. So the ground
Right.
floor of admin block is already functional. It is in production since the past 3 months. And the
Understood.
construction activity of ball plant is already before schedule. It is going on well. But henceforth in this current quarter or the next quarter, if we see any unforeseen delays in the construction, so that we are not sure, but as of now, the project is on track. There is no delay.
Okay, okay. So this last 6 months, the increase in employee cost, does it generally belong to that ground floor plant that you have started, or it's
No.
because of the March quarter bonuses and all?
No, because, sir, should you, or do you want to answer or should I answer?
No, you can answer. There is no problem.
Okay. So actually, there are two factors. Earlier, our directors were not taking salary. So that salary has been added on this year.
Okay,
Earlier in partnership concern, they were not given remuneration. They were always given interest on their paid up capital. So that remuneration has increased the employee costs. And
okay.
another thing is, if you must have seen the entire general industry scenario, all over India, the scenario. So the labor rates have gone up, which is usually the case in case of inflation. So that is a standard normal procedure. But as you see the ratios, if you check, which was in
Yes.
January, so the ratio is maintained. It is not substantially changed,
Yes, yes.
the percentage. Okay.
Okay, thank you.
Yeah.
Any other questions?
Yes, sir. Kunal again.
Yeah.
Sir, so are we supplying directly to Maruti's OEMs, or we are routing it through SKF and other players in the industry?
We already supply bearing manufacturers, majority we are supplying.
Mhm. And are we getting any bigger export opportunities from existing players?
Yeah.
Suppliers? So if I look at, or if I may ask your capacity utilization over next 2 years, so say in FY24 and in FY25, what capacity utilization you will be at the end of exit?
As a hardcore production person, I would like to have 100% utilization.
You would like to, that's why.
Obviously, this is, see, any person who is putting up our capacities want to get it utilized as fast as possible. See, we have done a rooftop investment. Okay, we started our investment somewhere maybe March or April only. Now this plant is functional. So just 2 months we have is functional. So it's very important. See, you put up a plant and start utilizing it to maximum extent as early as possible. So that is usually the targets of my team and all are always working on these directions. Everybody is running around to customers, chasing the customers. But see, even if I wish to, but it doesn't get the way it is. So it takes little time getting approvals with customers, because customers see our product are very sensitive, and nobody would like to use a product which is like not proven in the industry and proven in the field like that. So it takes little resistance from the customers, new customers. Old customers, those are already years together with us, they know that what sustenance and what quality performance we have. So we have a 0 ppm standards with so many customers. Our delivery compliances, delivery performance is 95-98% plus, and these customers are happy customers. So those who have got their plant abroad are already recommending, asking us to contact those plants. But there are always some other challenges. So we are trying to overcome those challenges, and we are targeting our capacity utilizations to the maximum level as fast as possible.
Sir, usually a product has a life cycle, right? For means a product usually runs for 3, 4, 5 years, 6 years, depending on the model of the cars and passenger vehicles. So in next 12 months, 12 years, 12 months, 24 months, how much of your revenue is at risk, and how much you would get from new products that you're developing or you have developed in last 12 to 18 months?
As I have understood your question correctly, that your intention or your question is related to how do we get affected by life cycle, a product life cycle getting affected our supply business. Is it your question?
Sir, my question is, say out of 50 crores of revenue that we have generated this year, there would be few products that are reaching the end of the life cycle. They might be generating 2-4 odd crores of revenue for you. So in next 2 years, how many products are going off the shelf, and they would affect your revenues?
Okay, first let me explain you our product. First thing, what product we are supplying to industries, both ball and a roller. You must have seen in past, I'm talking of maybe 10 years back or 20 years back, you need to change the parts after 1 year or maybe 2 years or maybe 3 years, you know. Now you must have seen a situation, maybe 5 years or 7 years or 8 years or even 10 years, the parts are not requiring changes. So we call it, it's a life cycle of that particular part. SKP is that particular category of manufacturer. Is we are manufacturing products which are meant for life cycle. We are already having products which are as per our life cycle only from the day one. Because we are catering to only OEMs. We do not catering to anything in market. Our market thing is negligible, not even 1 or 2% or 3%, negligible. So majority of our products are going to major users, a tier one company. So our products are fully meant for life cycle. So we do not get any revenue effect because of the product replacement cycle is getting longer. So we'll not get that particular business. That's how it is. I hope I answered your question.
Got it. Thank you, sir.
Hello, Falshikar ji.
Yes.
Paras.
Yes.
Good evening. Sir, would you give some light over how we see our FY24 numbers? You know, ballpark, not how much will be rollers, how much will be balls, because balls we are adding capacity from the third quarter. How much would be export, roughly from 3%, where will we be? Rough ballpark numbers.
See, very difficult at this stage to, you know, exactly, post any figures or commit any figures. Why I'm telling you this particular thing, I'll be very frank with you. A customer, you know, has got a different focus at different period of time. Many a times I got a RFQ, a roller X, ball Y. If I take a value of X and Y, more or less same, you know. When we need to quote all the products, so we quote all the products. Then what happens when we take the discussion at the next stage of, you know, sample submission or testing or that particular thing? They said, okay, we are not focusing on X, we are focusing on Y. So very difficult at this stage to predict. So it is both way. It is vice versa. At times the customer would give the RFQ for both ball and roller. Then they'll say that, okay, currently we are focusing roller. Some will say we are focusing ball. It's okay. It doesn't make much difference. But to commit or to say, you know, our capex, what we are adding is we are going to be a 200 tons company monthly. We have production targets for another maybe 1 year to 2 years period of time. We should be at that particular level. Similarly for rollers, in 1 year to 2 years period of time to that particular level. Now, to hit those targets, we need to have a human resources in place. We need to have a customer in place. We need to have a systems in place. So currently what we are working is to place our systems in place so that we are ready to adapt to the customers when he comes to. I cannot say to a customer when he comes to my factory that I'm working on this, I'm creating this, I'm creating that. I cannot tell that particular thing. So we are getting ready for our next levels as soon as fast as possible. That is number one. Number two, the technologies what we are adopting now is the state of art, the next level. See, why I'm saying this particular thing, because the customers what we are hello, yeah, customers what we are targeting currently are the world's who and who. They are the best in the world. So maybe India or abroad, everywhere they are the best of best. Okay, now what we talk is a 0 ppm levels. Those who are in this business, they know what is ppm, is parts per million. So you talk of zero. Zero means there is nothing. So you don't pass on a single defect to any of the customers in millions of billions of product what you supply. You understand the criticality of the product manufacturing. So these are the requirements of future, and we are working on those systems so that we will be in a position to supply to the customers. But the utilization, you know, I am saying utilization, I want to do it the next day if I'm in a position to do it, but you know, it takes some time to get it approvals.
I understand, but see, this is our second earnings call, right, after listing, and we're doing it after 6 months. So where other companies have quarterly earnings, we get some roadmap and all. If that will help people to form views, not saying give us exact estimates, but a target that you have for internal team, plus minus some roadmap towards how FY24 will look like.
Our targets are 20%, 20% up for the current year. Now because we internally we have a target that what are the needs to be achieved. See, first thing, please understand. We have first you understand the timeline. Okay, 6th of Jan we have converted to a company. Okay, that is almost 13 to 14 months back. Okay, we have listed in month of July, not even year, not even 12 months, less than 9 or 10 months like that. Okay, all capex, all additions, all futuristic plans, all these things in past same period of time, maximum for 8 months to 14 months, 15 months. So this is a very short cycle we are operating. So revenue will come, 100% will come, because a customer needs a package and we have a package. Only thing is that time. So growth, we are internally projecting that we should grow by 20% at least for this year. We could not able to grow 20% in 22-23 because we had, you know, we have received, we had done a techno-commercial clearances also. Everything was done was because of this Russia war. Products got a import duty of almost 10% in Europe. So our product become 10% costlier to a immediate customer. So it became immediate setback. So we couldn't able to capitalize on those. So we are working on those lines now. So let us see.
Let me put it the other way around. Export was only 3% for FY23. Okay, and that is where we were expecting a lot of growth. Are we expecting any growth in the domestic market for FY24? Let me put export as a question mark. It will come as when it comes.
Yes, yes. Because we are discussing with the many customers who are currently importing. So those customers, we have already given a proposals for a techno-commercially, more or less everything is done. So only questions of, you know, their approval procedure and all. These are all big companies.
Correct.
These-
Adani, sorry, Maruti Green is a very big, right?
So
there
these
are
people,
up to
these
eight.
people are part and parcel of those supply chain. So
Correct.
to move them, it takes little time.
Correct. So that was my next question. So if we get a Maruti Green approval in February, does it take 12 to 15 months for a
See, in government of India is putting a lot of stress on made in India. So these
Correct.
companies got a lot of pressure to convert to make in India product.
okay?
They have already under pressure. They have already contacted us that we want to localize these people, these items. We already marked the green, so we would like to start business. So we already given all from our side. We have done our part. So we are just waiting. We are pushing them, but we cannot push anyone to a beyond certain point.
Sure. Thank you. Thank you. And all the best.
Thank you. Thank you.
Hi, this is Mulesh. Good evening, everybody.
Good evening, Manish bhai.
I have just one question. You said that we are facing some challenges for export to Europe. So are we exploring other countries for export by any chance?
Yeah, other countries are also there. But Europe is currently facing huge issues because of their cost structure. So even if the challenges are there, we have already given commitment to these clients and already told them that we'll match whatever the issues are there. So we have to be one-to-one open, and then let us see how it will transfer. It will convert.
Yeah, that we continue at its own level. But are we exploring other countries, and what are the traction or the feedback you are getting from other countries or customers from other countries?
I would like to, first, everybody, even our entire investor community, first would like to clear one point. What happens, our product is very critical in nature, number one. Number two, we do not have infinite capacities available at this particular stage of time.
Right.
We had done a capacity allocation to one customer, maybe two customers at one particular time. And because of these reasons, we could not able to, do those capacity utilizations. I cannot, go to customer 1, customer 2, customer 3, customer 4, customer 5, that I'll offer you this capacity.
Understood.
You cannot be sure as to this customer will not buy from you or will buy from you. So both these ways. So as a SKP, we need to be very cautious that we offer excessive capacity, which we are not in a position to manufacture, and if it backfires, we are in deep problem. So we cannot sustain those sort of a situation. You can understand. So because of these reasons, what we are first currently focusing on capacities creations, then we approach once we are reached to a certain level, then we approach to customers that, okay, let us talk business.
Understood. And sir, I think one of the previous participant asked you about the maturing of a product. Probably what he was trying to understand was that suppose one of our part is applicable to Maruti's one model, let's say Alto. And if Alto is likely to be, faded out, then how that will affect our business? Probably, yes. If I have understood his question right, probably that was his question.
No, usually what happens now, any model phase out, this is a standard system. Any model phase out there, we get a trigger from our end customers that this particular model is to be phased out over a period of time. We get a timeline, and this particular timeline is to be followed by everyone. So we know that this particular has to be discontinued in this particular quarter or this particular timeline. So we know.
So he wanted to understand probably what could be the impact on our current year's turnover if any such models are likely to be phased out.
Nothing. Why I'm telling? Because see, if you must have seen, most of the time, all automotives if you take a base platform, the base platform, so it would be common. Maybe 3 platform, maybe 4 platform, maybe 5 platform, not many platforms are there. It's only the outer, the things which changes. So the parts more or less
Remains the same.
and we are into the sub parts. So
Sub-
those parts more or less doesn't change.
Okay, okay, great, sir. Great. Wish you all the very best. Thank you so much for answering my questions. Thank you.
Thank you. Thank you, Manish. Anybody has any questions? It's already now 1 hour. But
Good
plus-
evening, sir.
Yeah.
Vishal Sangvi here. Yeah, sorry to interrupt you, but I have a small request. Since being in the SME platform listed, maybe as per the regulations, you need to provide a result half yearly. But in this current world where the information is such a fastly available to everyone, a small request to you that at least if we don't give the financials, but at least give the business update at some lower frequency. That will actually help us to understand the company and I actually like your modesty of not giving the any rosy picture without having that thing in the mind, in the sense rather to give the projections or the guidance for the FY24 and 25. But at least if we can get the business update, which is already the past number, at least on the each business, that will be very helpful.
I understand your point. See, as a SME, we are, by regulation, we have to publish a half-yearly results. And that's what we are doing currently. Please understand, Vishal, one more thing. We were a partnership company till last year. That too a husband and wife. So the wife would command, okay, said we have to do, okay. So from a partnership company to a corporate world, I understand the investor would expect do this, do that, do that. We are trying to do maximum level. To even to publish to half yearly results, it takes a lot of efforts for us. Why? Because one, we are first localized. We are in place Surendranagar. The place Surendranagar, if you must be aware, is between Surendranagar is between Ahmedabad and Rajasthan.
Let's sleep with us.
Sir, take some rest, sir. Yeah, take 5 minutes, drink some water.
Now, so
Sir, Vishal sir, actually what it is, this final, till now it was a regulation for half yearly submission. We are trying our best to upgrade our team, to upgrade our cells for a quarterly result. So if everything goes well, we'll try our best to, because we are implementing new systems as well in our current setup. So we are having new ERPs in place. We are having more manpower in place. So now, if everything goes well, then I think we should be in a good position to maybe give our quarterly results after December.
That is very helpful. Thank you very much.
We'll try our best. Okay. Any other questions? If there are if there are no further questions, then should we close this meeting?
Yes, thank you very much, management.
Thank you all.
thank you. Thank you,
Thank you,
everyone.
everybody. Thank you so much.
Thank you, everybody.
Thank you.
The recording will be available.
Yes, we will upload this particular recording on YouTube, so anybody can watch any particular time. Even the
Okay, thank you.
last year, the last first half recording is already available on YouTube.
Thank you.
Okay, thank you very much.